So it is a pretty difficult day. Look at the advanced decline ratio, because that will sum things up for you. We are more or less at the widest point of the day. And in fact, if anything, that gap has gotten wider. We've been getting you individual stocks to focus on, because I think the conversation that happened just before this with Devin Choksi was something that you should have paid attention to. If you missed it, catch it on social media later, because the point is that the fundamentals remain strong. This is a technical sell-off, and you might want to look for pockets of opportunity. From that perspective, let's talk about GAIL, IGL, as well as MGL that are in focus today as global gas prices continue to surge. The US benchmark Henry Hub has jumped to the highest level since December 2022, and on a quarter-on-quarter basis, prices are now up 49%. Let's go across to Somit to find out what are the factors that are driving this spike. Somit?
Well, yes, US gas price rise is definitely going to impact GAIL, IGL and MGL's financial performance. Now, if you look at Henry Hub, which is the US gas price benchmark, that has risen to around $5 per MMBTU. In fact, at one point of time, it was up to around $5.4 per MMBTU. And this is the biggest, highest price that we have seen since December 2022. And the prices have been gaining for the last 4 consecutive months. In fact, on a quarter-to-date basis, which means that from the right of this quarter, that is Q3, prices are up more than 40%. And why we are seeing this sudden surge in the prices? Because of a colder than expected weather in the US and because of higher gas exports. Both these factors have led to this rise in the gas prices. Now, how will this impact the Indian gas companies? Firstly, if you look at GAIL, GAIL imports nearly 15 MMT, that is million metric tons of gas into the country, and nearly 5.8 MMT of this gas has been imported from the US market. Now, of this 5.8 MMT, nearly 1.16 million metric tons of gas is not contracted, which means that this gas price, this gas volume could stand to get impacted if there is a sudden surge in the gas prices, and the prices of the same are linked, and rise in price of the Henry Hub will increase the gas sourcing cost for GAIL. Now, if you look at this table here, you can clearly see how the cost will increase for the company. Now, GAIL, if you look at in the second quarter, prices average around $3.3, which has now increased to $5. Now, whenever there is gas export that happens from from US, there's a markup of 115%. So this 3.3 becomes 3.8, and 5 becomes 5.75. There's a fixed cost of $3, and then there is a transportation charges of close to $1.75. So the total cost for getting that gas from US to the Asia market increases to was $8.5 in the second quarter, which has now increased to $10.5 per barrel. And every $1.5 per MMBTU increase in the gas prices increases or impacts GAIL's annual EBITDA by close to 780 odd crore rupees, which is nearly 5.5% of the last 12-month EBITDA. And if you look at the quarterly number, that stands at around 196 crore, again close to 5.7% of the second quarter FY26 EBITDA that the company had reported. Now, when it comes to city gas distribution companies like Mahanagar Gas and IGL, for Mahanagar Gas, more than 30% of the gas sourcing happens at a price which is linked to Henry Hub, which means that if Henry Hub price goes up, their gas cost also increases. And for IGL, nearly 18% of the gas sourcing cost is linked to Henry Hub, and with an increase in Henry Hub prices, their cost also increases. And generally, with this increase in price that we are seeing, their margins stand to get impacted by around 0.8 to 1 rupees per SCM, which is nearly 13 to 15% of the second quarter margins or the second quarter unit margins that the company had gained.